The global economy faced significant upheavals. A series of aggressive trade tariffs and unexpected moves by major oil producers sent shockwaves through financial markets worldwide. In this video, we'll explore the events that led to this turmoil and their far-reaching consequences. The crisis began when President Donald Trump announced sweeping new tariffs, including a minimum 10% tariff on most imports and up to 49% on certain countries like Vietnam. In retaliation, China imposed a 34% tariff on all U.S. goods, escalating fears of a global trade war. These actions sent shockwaves through international markets. The escalating trade tensions had a profound impact on oil markets. On April 4, 2025, oil prices plummeted to their lowest levels since the pandemic. Brent crude fell by 7.5% to $64.85 per barrel, while West Texas Intermediate dropped 8.3% to $61.83 per barrel. Amidst the market instability, OPEC Plus made a surprising decision to increase oil production by 411,000 barrels per day starting in May. This move, aimed at stabilizing market share, further contributed to the decline in oil prices. The combined effect of trade tariffs and fluctuating oil prices led to significant market volatility. Major stock indices experienced sharp declines, with the Nasdaq dropping nearly 5%, approaching bear market territory. Investors grew increasingly concerned about the potential for a global recession. In a move that stunned analysts, OPEC Plus chose to ramp up oil production by 411,000 barrels per day starting in May. This decision came even as oil prices were crashing, something that would normally trigger a supply cut. But OPEC had a different strategy. They wanted to defend market share before U.S. shale producers could step in. The group believes demand may bounce back later in 2025, and they don't want to lose their position in global supply chains. There's also growing internal pressure within OPEC Plus nations, many of whom rely heavily on oil revenue to fund public services. By flooding the market now, they hope to weaken competitors and tighten control over global pricing in the long run. However, critics argue this move is risky and could spark a prolonged price war. The last time OPEC did this during low prices back in 2014, the market took years to recover. Events show how interconnected our world economy has become. A tariff in one country can tank prices in another and ripple across industries. Energy markets in particular are highly sensitive to both geopolitical tension and production shifts. The coming weeks will be critical in shaping the economic outlook for the rest of 2025. Thanks for watching. If you want to stay ahead of these complex developments, make sure to subscribe and follow for more breakdowns. We'll keep you updated on oil, trade, and everything affecting your economy and your wallet.